On this week's episode of the Investors Corner podcast, sponsored by Avocado Property, me, Mike and Ian are going to give you a property market update. So what's happening with sales, what's happening with exchanges, what's happening with rental prices, and what's happening with tenant demand. We'll also look at, is now the perfect opportunity to either purchase a buy-to-let property or add another property into your portfolio. And we'll talk about how you can do that and what you need to look for. So listen to this one, share it with friends and family if you want, and make sure that you hit the subscribe button. Welcome back to another episode of the Investors Corner. You got me, Mike and Ian today.
Bonjour.
Ian's back, second one in a row.
Yep.
He's in.
Do a third, I get a free t-shirt.
You get a gold star and you can put that on your desk.
I mean, my face is on the icon, so I
should turn up occasionally.
Yeah, I guess
Thanks.
I should classify as a host rather than a guest, but feel like a guest.
But he's here. He's back.
Yeah,
he's back. So straight in, little update on what the market's doing for the eyes of an agent, Ian. So what's been happening that landlords need to know?
Yeah, well, summer months. I was on holiday for a little bit of that, which is why I wasn't on the podcast.
Yeah.
You may have spoken about that with me, not on the pod, but I've come back. Obviously, done the research, deep dived into it, with no use of AI. I must admit, just the paid for software that I use just to find out exactly what's going on. So I can talk for England because I removed Scotland from the equation statistically because obviously the market's a bit different there.
Yeah.
It's more relevant to this podcast as well, I think. So 77 days is the average amount of time at the moment for a property to go on the market and go under offer.
That's a lot.
It's a long time, isn't it?
Mm.
Yeah, it's a long time. Yeah. It was 63 last year. So it's an increase.
Yeah.
Which is quite interesting because if anything, I feel the market feels better than it felt last year in terms of sales, but actually it is taking a little bit longer. And I can point a finger at why that is with the next statistic, because for the available listings between July and August in England, 63% of those had a reduction, which is catastrophically high. Like I've been in the game for 22 years this month, actually. And that
happy anniversary.
Thank you very much. Yeah. I'm not sure it's a happy one. but it's there. But yeah, to see that amount of properties coming onto the market at what you can only call the wrong price, that is crazy. I don't know whether it's the fault of the agent or the fault of the seller. I would say it has to be something that's pointed in both directions. I don't know what you think on that, Mike,
totally.
but there's a problem, right?
Yeah, well, inside a state agency, there's a lot of why do people overprice? But then we all know that sellers all think their house is Buckingham Palace, used to be the show home, biggest plot on the street, and massively improved because they once cleaned the windows. And that's just the way it is. There's an element of estate agents should be telling people what they need to hear rather than what they want to hear, though. So it's a tough one. And I know everyone argues, the Scottish system this, Scottish system that, but we're connected to a couple of Scottish agents and they're saying, well, they're getting the home market report from a surveyor and then selling houses like 50k over. Mm-hmm. So those valuations are crap as well.
Yeah.
Mm.
So I don't have a solution, to be completely honest.
There is no fix.
Do you think it's more agents overpricing rather than sellers thinking that their property is worth more? Because
I think
I
honestly think there's an element of both, because it was never as an agent on the ground, it was never in my interest to overprice, because I don't know, I just cut to the chase and tell people what they need to hear. But I would always have someone every day trying to bid me up on their own house. I'd say, look, this sells for 600 and here's why. And they're like, oh yeah, but can we try 625? What if, if we do this, that and the other, can we give it a go? I think, we could push this. And you're like, you're talking to the wrong person. I'm not going to buy the house.
Mm.
You're literally trying to encourage me to overprice it. So I think it's 50-50. I don't think agents are totally to blame for overvaluing. I think everybody wants the most they can possibly get for the house,
as much as
they need the counterbalance of the advice of, if you reduce your house price, you're less likely to sell it.
Well, I think also a lot of homeowners, if we look at like the baby boomer generation, call it the last 30 years, historically what people have done is they've been able to slap 25 grand more on it.
Well, we can always
and the
come
market
down.
we
Can't
catch
go
up.
up.
But the market caught up,
Yeah.
didn't it? The market always would catch up. So if you're on the market for 6 months, it's probably gone up 15 grand. So you've caught up and then you're getting the deal. So the fear in a rising market, which is historically what we've normally seen over the last 30 years for that group of people, is you could overprice it and it would catch up. But actually at the moment, the stigma is very different. I think if you've got a reduced sticker on the portals, it's seen as a negative. It's like a black mark, more so than it's ever been, because I just think people are, they're anti certain things, they're anti adverts, they're anti sponsored ads on Google's. You know, we're just, as a group of people now, we're anti those little red flags.
Ads, don't you?
Yeah. If I get an email and in the title it says unlocked, I just delete it because it's just an AI template. So there's little things now that we kind of pick up and you're anti it. So those 63% of people in those summer months that have had to be reduced are now flagged by buyers as negatives. Why is that important on this podcast? There's an opportunity there.
Yeah.
They've reduced because they want to sell. They are listening to the market to say, right, we're not selling at X price, we've come down. Potentially for a first-time buyer, for an upsizer, they look at that and go, I'm not looking at that one, it's been reduced. For a property investor, it may be that those 63% are the ones to look at. You know, it might be that is your target market as a property investor, especially as you mentioned the other week about going into Q4. That's a really good opportunity. And I'm not saying, you know, for homeowners listening that you're going to get smashed by a property investor and bent over a barrel, because you haven't. You just make the decision on yes or no, don't you? But you've got an opportunity to make offers based on that reduced motivation, and your perspective is looking at it in a slightly different way to what the standard buyer is looking at, and that's where your opportunity is linked, basically. So that's why I think that's important. In terms of properties going under offer, so listing to sold subject to contract, in the 20 plus years that I've been doing estate agency, what I would classify as a solid normal market is anything over 55%. 55 to 60% is fairly normal. I would say the average probably sits somewhere in there. The data doesn't go back that far for me to review, but just from a theme, that's what I would say. For the England perspective, in those summer months of July and August, it was 72.5%. So that also shows that nearly 3 in 4 properties that are listed do find a buyer. So that also shows the market is quite good. That's what I would classify as a growth market. So if I was to use that as a forecast based on what's happening with Bank of England base rate and mortgage rates and mortgage applications, that says to me over the next 12 months, we'll see an increase in the property market. I'm not saying we're seeing 10, 15% or a boom, just an increase. That's probably
increase in transactions or increase in prices, because that's two really different metrics.
I believe increase in prices than what they sit at today. So I think if we go 12 months into the future, just based on those, that we've got buyer quality there, because otherwise 72% of properties don't go under offer. And the fact that we have got the base rate come down, mortgage rates coming down, people are in the market to do things. People are clearly selling, putting their properties on the market, more listings in those periods, those 2 months than what there were last year as well, only marginally, but still more people looking to sell. With those in mind, I would say that we see something in line with inflation price growth. So I would I'd hang my hat on 3% over the next 12 months. And that's nice. That's a nice place to be.
Yeah.
It's not crazy. It's not like 5-6% where it feels it's a bit of a crazy market again. 10% bonkers. But it's not like, okay, is it 1% either side of zero?
Yeah.
I think it'll be a solid 3% price growth across the national average.
That kind of 3% encourages people to get on with it. And that's what you need in a housing market, don't you? You need people to have a reason to get on with it rather than just to look and look and look for perpetually ever, because house prices are stagnant. You don't have that motivation to just pull the trigger.
Yeah. And I think you've got an opportunity now as well where the budget's around the corner. Okay, what's going to happen with that budget? We don't really know. Okay, there's rumours leaked out.
We don't even know who's going to be given the budget at this stage.
It's very.
But I do think it means that if you're a property investor, you're in a fairly good place to go out there and start acquiring. You know, with what we've spoke about, if you want to go out and get that family home, it's still a shortage of properties being built, regardless of whatever the we're going to do this scenario was on builds. We're still a decade's worth of properties short. That has an impact. We're still in a position where, although rental prices, I believe the average rental price is not growing as much as it had been over the last 3 years.
No, we're probably at around sort of 3.4%.
Yep.
The southeast, so it's gone down quite a bit compared to your double rate inflation or your 8%.
But traditionally, if we go back to way pre-COVID when things were normal, 3 to 4% was standard.
It's the norm
on rental growth.
Yeah, it was the norm. So it's just gone back to what it was.
Yeah, and why do buyers go in to buy properties? Why do tenants want to buy properties rather than rent again? The answer is always the same. It's what is the justification of price difference of being, obviously if they got the deposit, you need to save for the deposit, but people can be motivated and creative to find the deposit from parents X, Y and Z. But if your rent is £1,500 a month and the mortgage is going to be £850 or £950,
you're buying.
You're motivated to buy.
Yeah.
Whereas if we went back 18 months ago, the issue was for buyers that your rent was £1,450 and your mortgage was £1,450.
Yeah,
so you went
more,
or more in some cases, and you weren't overly motivated to find the deposit, and you weren't in a position where you looked and went, well, it makes no sense. I'll stay flexible as a tenant. Whereas now that's changed, and when that seesaw changes, we see buyers enter the market, and that's what we're seeing at the moment is good amount of buyers entering the market. It's just interesting that it is taking a fair amount of time for properties to go under offer, and that has an impact on those price reductions.
Yeah.
I must say, obviously, I ran borderline plug here, but I've ran the same data for the avocado agents, and the 63% drops to 28% if you're selling with avocado, and the 72.5% finding buyers increases to 83% if you sell through avocados. Just a minor little plug there. Use an avocado
in any way, shape or form borderline.
Sponsored by. There you go.
But just going back to properties being out there, I actually did some research for a friend of yours, actually, Ian. It must have been about a month ago, and I looked at all of the properties on the market within the postcode that he wanted to purchase a buy-to-let. And I looked at, what properties have been on the market for more than 3 months. And then you can also pick out what properties have been price reduced as well. And there must have been probably about 15 or 16 properties within the postcode he was looking for 2-bed houses specifically, or 3 beds as well within a certain budget. And nearly all of them have been price reduced. All of them sat on the market for more than 3 months. Mm-hmm. So I gave him that report and I said, you got a great opportunity here. Yeah. Because if they've been sat on the market, they've been price reduced, they're not selling. Mm-hmm. So that's your time to go in. And, if you want to put a cheeky bid in, put a cheeky bid in. You never know where it's going to go.
You've got to be able to think objectively rather than with the sheep who are all like, well, if it's brand new, it's great. And if it's 3 months old, it's rubbish. That's not true. The 3-month-old one can be great. Last 2 properties I've bought, family home and an office building. Family home, I got 65 off the price because I saw it. It's in the road where I want to live. It's a great road. It was overpriced. I saw that. I spoke to the agent. There's loads of viewings going around first weekend, loads of viewings going around second weekend, some viewings going around third weekend, and I'm just watching, knowing all of them are going to just give the owner the price feedback that I want them to give, but they're not going to be bold enough to write a report to the owner and say, I want to pay this much for your house. This is why, and this is why I'm the perfect buyer. Did exactly the same with a commercial building we bought. Mm-hmm. That's gone on the market for way too much money. Talk to the agent, make friends with the agent, don't go and view it because it's not worth it, because at that point I'm just insulting the owner. Wait. Let everybody else do the insulting for me, and then come in with something objective when they've kind of realised.
Yeah.
And maybe even before they've done that reduction, because I want to get in at that perfect time. Office building, I don't know, we got 140 off the office building?
Yeah.
Something like that.
Nearly
true market value. I'm not saying I'm buying property at the market value like I'm the messiah.
It's like 15% reduction.
But I reckon anyone else who viewed that building just walked around and went, it's overpriced, I'm not buying that.
Yeah.
Whereas I went, it's overpriced, this is what it's worth, this is why, and this is why you want to sell it to me. And they went, yeah, fair enough, I'm bored of this now. Like, get me out.
I think you have to open your eyes to that. Like with your contact there, that a friend of mine that I introduced, you look at something like that, and I think where the market sits at the moment from a seller's eyes is they are getting a bit disheartened. And my opinion on whether it's the agent or whether it's the seller that's messing up there, the first point is all homeowners know pretty much what their house is worth. Because you can't
email me every 30 seconds telling me.
You can't not. And if you do your Zoopla or you do your online house price calculator on the Avocado website, you will feel whether it's too high or too low, the estimate that's come back. So you know what your property's worth. And then you get the agents round who are talented in the art of selling. That's why the valuer is coming round there. They are not a valuer, they're a salesman. They're the best.
Yeah, I was going to say, we need to retitle.
They're the best
valuations manager. No.
They're the best field sales performer in the office, and that is why they're coming out to see you, because that's their job, is to get that contract signed. Which means if you listen to the extent of their sales on the valuation for them to win the business, and then all of a sudden you convince yourself, actually maybe we could get 40 grand more, maybe we could get 15 grand more, 20 grand, whatever it is, you've just been sold to. So I think it is the fault of the agent to be the catalyst, but it is down to the sellers to turn around and go, actually I'd rather get interest. Like, I want to move. I don't just want to get the best price for my house. I actually want to be able to move in a realistic time scale.
If you're looking to sell your property, the best question is, what is the price that gets your best buyers through the front door and offering on this property this weekend? What is that price? Because that turns the honesty switch on. It shows you've got motivation. I nicked that from John Savage, I think, but it's true.
We'll take it. Yeah.
But yeah, I mean, that kind of, when I speak to people about rental properties and taking them on now, obviously with rentals, it's, competitive where, a person might get 4 agents round. And the conversations that I've had with landlords before, when they've turned around to me and said, so-and-so said that I could get 3.5 grand for it.
I was going to say, is this the same in lettings?
So it's like 3 to 3.5 grand a month. And I said, well, what makes you think that? It's like, because they told me. So I obviously get the laptop out and say, well, this is what's been let over the past 12 months. This is what's currently on the market. Where does yours sit in here? And they said, well, it doesn't sit anywhere because it's not worth that compared to what's available. It's like,
and rentals, compared to a homeowner sitting in the house, the homeowner's using that house. Rentals, if you allow your property to go vacant, you're losing, £50, 100, like whatever, £100 a day.
Yeah. Well, you imagine, if you've got 2.5 grand rent, a month rent coming in, your mortgage is 2-3, and you've already moved out, and your property sits vacant for 4 weeks to 8 weeks because it's overpriced. Yeah. It's nearly 5 grand you lost out on.
Yeah, it's mental.
So it's like, what's the point? So I think it comes down to, sellers, landlords as well. To actually question.
That question goes to landlords as well then, is what's the rental price that gets this property rented this weekend to the right people? It's a straightforward, short, succinct question that should just click on that if you've got a valuer coming around to your house.
Yeah. So it's a funny old market out there. I mean, the seasonal trend for August reported by Rightmove, from the portal, was that the asking prices in the country were like 0.5% lower, something like that. It might have been 0.8%. But it just always is in August because the families aren't moving. So the average asking price is lower because the listings that have gone online are not the 4 beds. There is a big shortage of 4 beds still come into the market. And again, there is part of the stamp duty holiday going back a couple of years that's still seeing that fallout, where everyone moved because they got the 15k saving. So there is still a bit of fallout from that. But I just think it's a good opportunity for property investors, new property investors, people that want to play the long-term game. You were talking off camera about which landlords do actually get rich. Why is it that 5% do get it right? And I think probably those 5% are looking at this timestamp at the moment. If you're new in it, this is a good opportunity, I think, for people to capitalise on a bit of PR negativity, a bit of fear factor, high stock levels, clearly a lot of reduced stock out there as well. People that do want to move, we're seeing as agents more and more chains being built. And if you're the bottom of the chain, you're in a really good position as well as things get, a little bit nitty gritty down the line. So
I think it's time to get the sign out again.
Today is the cheapest day to buy a home.
Yeah.
It's cheaper. It's cheaper than it was 2 weeks ago.
Yeah.
So, and I don't see things actively changing, but maybe now from my point of view, if I've got friends and contacts that have got the cash to get involved properly, I'd say it's a good time to strike. And I always think buying at this side of the year is a good time.
Yeah.
Don't wait to the new buyer frenzy in January. If you're a property investor, do your business in November.
Yeah,
that's what I would say. Do your business at the start of December.
Yeah,
it's like with any investments, isn't it? It's like when you see stuff like this is where the wealthy become wealthy, is because they see opportunities like this to go into a market to get a great deal, which benefit them in long run. It's exactly the same with stocks and shares. If the fear factor is there and everything's going down, that's when you come in, because that's how you're going to build your wealth on that and get a good deal on things. So yeah, I mean, now's the perfect opportunity. And if there's any listeners out there that have a specific postcode or a specific area, and they want that sort of data on what properties have been on for a long period of time, what's been price reduced, all of that sort of stuff, then just reach out, because we can get that data for you and help make that that next buy to let purchase for you by finding the right deal for you.
And we've gone off topic a little bit for your agenda, which is probably...
We'll save that for a next one.
It's probably what happens when the three of us are on. But there is one bit which I do think would make quite an interesting topic of conversation, and that is you put about potentially debating, is mortgage free ever the smart play? And the topic on there is debt is a tool, not a trap. Well, I kind of read that, and I just think this is a good topic to talk about at the moment, because... What's your guys' view on that? If we're looking at finance, it's not a trap. But then if we went back 18 months ago, 2 years ago, people that are remortgaging their buy-to-lets would have said, I feel trapped because of rate changes.
Yeah.
So what should be the ambition for landlords out there at the moment? Should they be trying to get their mortgage levels down? Should they be trying to increase their finance to grow their portfolio? What should they be doing in your guys' opinions? And you can't go, it's all individual, and be on the fence with splinters. So
I'd already I prepared my answer, and I can talk from personal experience. When I was in my late 20s, I had mortgage debt 20 times my salary as an employee. I was all in. I didn't care. I did care, but I saw it. All debt was good debt. I was flying. I was making money on the first of the month, way before I got up for work, and that didn't scare me in any way, shape, or form. I was like, how high can I get before someone asks me a question here? Because my personal income can't service this. But I was literally had interest-only mortgages at 250 quid, and I was getting £900 rent on flats, and it was like, this is literally like a cheat code. Like, why doesn't everybody do this?
Yeah.
But I was 28, I was single, and it's like, what's the worst that can happen? Like, I lose it all overnight and I come back again, which some people did. I mean, some people were way more aggressive going back to 2008 before I'd started. I started investing in 2008 when everybody else was running in the opposite direction. I was like, well, that's cheap.
Yeah.
Like, and mortgages are cheap. Why is nobody else doing this? As a I'm not 55, but as a 55-year-old, I wouldn't have the same appetite to risk.
Mm-hmm.
I wouldn't have the same need for risk unless I'd really, really messed up my career and had to get out of it fast. I'd be looking at, right, where can I get where I've got the lowest hassle? And we've done the whole time, money, freedom thing.
Yeah.
If I've got 15 properties on mortgage, I'd probably sell 10 of them and have 5 mortgage free.
Yeah.
And just sit on the income from them, because I've got 10 less people to talk to. And 5 where I don't have to. I hate remortgaging. I hate paying the fee. Like, it's an irrational hatred of mine as paying an arrangement fee. So I would like now I'm in that middle zone in my mid-40s where I don't want to do the 20 times my own income thing, and I'm not quite ready for the everything's paid off thing. But in that transition where I will go that way.
That's Mike's view.
Was that on the fence?
No, it was personal circumstances. I mean, some of the questions I guess that need to be asked is in terms of the interest rate versus price growth, and in terms of what the price growth was for those properties, because you were on interest only, so your finance wasn't being paid down.
Nope. I was just using it to buy more.
Yeah,
purely.
And you very much felt you were buying in a good time, that if you kept hold of those properties for 5, 10, 15 years, that obviously you were buying at the right time for them to climb. So your gamble was on, I'm making a decent monthly profit here, and in 10 years' time, this is going to be worth more than it is today, basically. And that's quite a nice way to leverage the debt, right? It works.
Yeah. I was being a bit lazy with my career at the time, but I knew I was earning more than my boss because I had other incomes.
Yeah. What's your thoughts, Andy?
I think for me at my age, the way that I look at things, I'd be looking to build the portfolio up to as much as I can. So I'd probably purchase a property, refinance it, buy another one, refinance it, buy another one. So I'd be living with mortgages. I wouldn't necessarily concentrate on going mortgage free. At some point I may sell those properties, but my goal would be, to keep hold of them for the next 15 years, 20 years, capital appreciation on them over the years, and cash in at some point further on down the line. Mm-hmm. That's the way that I would look at it. But that's me, my younger self.
What if
about
capital gains goes to income tax levels?
Then we might have another conversation about it, and I might change my mind. But yeah, I suppose you never know with things like that. Then it's obviously going to change the course of how you deal with things. Do you start holding, like, do landlords then really strangle the market? Yeah.
No, I'm not going to bother ever selling it then.
Mm-hmm.
But we spoke on the previous podcast about whether you would invest in stocks, shares, crypto, or keep in property, and things can change on any of them, right? So with stock, shares, crypto, you're in the hands of someone running that and hoping that they make the right decisions and all of that sort of stuff to get a return on. With property, all right, you're more in control of it. And then if you have the government that does things, or something happens in the world where it affects house prices, mortgage rates, etc., then again, that could change the course of how you think about things. So all depends on what's happening at that time. Your goals can change, right? I could go for a 15-year goal, suddenly down to, fucking hell, I can't do this anymore. I need to change my goal pretty quickly. So yeah, it just all depends on what.
Yeah, so I agree with both of those. And I think as landlords, as property investors, as agents, now that we're kind of understanding mortgages and we're looking and doing more deep diving into rates, because we don't have that equity growth that we had from 2008 to 2020 or whatever, you just know when money's cheap. And we spoke about it on a previous episode. I'd have to check what the best deal is out there at the moment, but for me, I kind of feel that 4%, what side of 4% is everything. Price growth, savings, high interest savings accounts, and obviously interest rates as well, inflation. What side of it are we all at the moment? And I think if you can get a mortgage that starts with a 2, that's good debt. If your
Of course it
mortgage
is,
is starting with a 6, it's bad debt.
Yeah.
So I think and obviously there's context behind all of it, but I think that's the smart play. And I think, the landlords that will get rich are the ones that take advantage at the right time, but also know when the right debt is the right debt for them as well. So yeah, I think that would be my summary. And I think for people listening, watching, that are active in the market, I would feel quite motivated about it at the moment. And if you've listened to this and you're kind of like, actually, let's go strike now, because with what I worry about with a lot of people that listen to the podcast, watch a lot of these sort of videos on YouTube, go to the sort of back of the room courses, someday is not a day of the week. So like strike now, because everyone's someday I'll do that, someday I'll do that. The guy you're talking to a month later, is he actually doing something? Or is he just waiting for some day? Because it's not one of the days. So do it on Thursday. Get going. I think get going now, because the money is fairly cheap on the debt aspect of things, and I do think you've got a good opportunity to strike. So that would be my motivational piece at the end of the podcast. There you go.
Nice one, guys. All right, so yeah, if you like what you hear, make sure that you subscribe to the podcast. Make sure that you share it with friends and family as well. The reason why we do these is to try and get all of the information that we can out to individuals that want to look at property as an investment, or want to speak to an agent in regards to how to deal with their investments as well. But yeah, thank you guys, and then we will see you on the next one.